This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Leading OPEC Plus members have begun discussions about an oil output cut at the group's next meeting on October 5, three sources told Reuters. One OPEC source told Reuters a cut was likely, while two other OPEC Plus sources said key members had spoken about the topic. A source familiar with Russian thinking told Reuters earlier this week that Moscow could suggest a cut of up to 1 million barrels per day, BPD. The latest comments suggest that key OPEC members have started communicating over the matter, although the volume of any potential cut is still unclear.
Oil prices rose on Thursday for a second day, briefly touching $90 per barrel as leading OPEC Plus members were discussing an output cut next week, but gains moderated on a stronger dollar and weak economic outlook. Brent crude futures for November rose 18 cents to $89.50 a barrel by 11:13 a.m. Eastern Standard Time, 15:13 GMT, after briefly rising above $90 a barrel. U.S. crude futures for November rose 31 cents to $82.47. Leading members of the Organization of the Petroleum Exporting Countries and their allies known as OPEC Plus have begun discussions about an oil output cut when they meet on October 5, two sources from the producer group told Reuters.
Moving on to the top news in the energy sector.
A heavy oil refinery turnaround season in Europe this autumn, plus French strike action, is set to push diesel prices higher and tighten supplies ahead of a European Union ban on Russian refined products which is due to come into force early next year. In October, around 1.5 million barrels per day, BPD, of crude refining capacity is expected to be offline in Europe for planned and unplanned maintenance, Energy Aspect estimated. This figure compares with 1.1 million barrels of oil per day of offline capacity in September, and is above the 2015 to 2019 average for this period. In November, offline capacity is expected to reach 600,000 barrels of oil per day.
LNG markets in 2023 may be tighter than this year as demand may rise in China, India and other parts of Asia, the head of the International Energy Agency, IEA, said on Thursday. We may well see that the LNG markets in 2023 will be rather tight, maybe tighter than this year, said Fatih Birol in remarks at the LNG Producer Consumer Conference in Japan. Global gas prices have surged to record levels this year, as Russia's gas supply cuts have placed enormous strain on the European and global market. High wholesale gas prices in Europe has seen the bloc import record amounts of LNG cargoes, drawing in volumes from top importing region Asia.
Next, we have the top news in metal markets.
Gold prices slipped on Thursday as a firmer dollar took the sheen of the greenback-priced metal, with mounting concerns over the U.S. Federal Reserve's aggressive monetary policy and impending rate hikes denting sentiment further. Spot gold fell 0.7% to $1,648.39 per ounce by 10:40 a.m. Eastern Daylight Saving Time, 14:40 GMT, having marked its best day since March on Wednesday. U.S. gold futures fell 0.8% to $1,657.10.
Aluminium and nickel jumped on Thursday, with buying triggered by the possibility of the London Metal Exchange, LME, banning new Russian metal from the list of brands that can be delivered against the exchange's contracts. Benchmark aluminium climbed more than 8.5% to $2,305 a ton, its highest since September 19, while nickel gained 6% to $23,115. Sources said the LME was planning to discuss banning nickel produced by Nornickel, which accounted for 7% of global mined production estimated at 2.7 million tons last year, and aluminium produced by Rusal. We will now look at the top news in the agricultural sector. China set its 2023 sugar import quota at 1.945 million tons, unchanged from the previous year, the Commerce Ministry said on Thursday. Quota volumes benefit from a lower import tariff. On its website, the ministry said 70% of the quota would go to state-owned firms.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.